Hello and welcome to this week Bitcoin update. It will be a short one today because not much have changed since last week, but we have a new monthly open, so let's see what that tells us. Going on a monthly chart here, zoom out a little. As you'll find out in our next educational video from Friday about multi-time frame analysis, I like to start my technical analysis from top to bottom. Meaning I first look at the monthly chart, then weekly, daily and lower time frames for execution. Let's see what this monthly close for February tells us today. So as you can see, that's a really big red candle, not looking good for bulls because this candle here gives me the bias for previous month low. We also have a market structure break here because this candle closed below the week that caused the all-time high. Yes, you can say that we had our first market structure break up here on this red candle, but in terms of swing lows, this one is the clear one that gave us all-time high. So because we have this market structure break here now, we can see a potential up in our fib retracement that we had on our charts since quite some time. The only question now is, will she go up first or down? So let's move on the 4-hour chart, zoom in a little and see if we can answer that question. Okay, we are still in this range here. Let's remove this fib here and update the volume profile and see what that gives us. We are currently between value area low and point of control of this range here. To be honest, looking at this chart, we don't have a clear bias for either up or down. But as I said, because we have the monthly bias for lower, which is this low here, swing failure pattern of this one here, I remove this fib retracement because even if we have the 886 down here, which means a swing failure pattern of these lows into 886 and could offer a potential bounce, I'm not interested in swings from this level here now because my bias is for lower. So I remove this one too, and I'll only keep a swing failure pattern of previous month low into our macro golden pocket 54.57 from bear market lows to all-time high. This one is a big zone here. So in these types of fib, it's best to wait for a clear trend reversal confirmation. And I'm not talking about a 5-minute market structure break chart. At least a 30-minute or 1-hour chart, ideally 4-hour, because this trade has the potential for a swing. Now, in terms of resistance, if she goes up first, we still have this 382 here that, let me remind you, it's from our last pivot high, which is this one here, from start of January to the last low. We have this 382 here. The only thing I don't like about this level is that it's in a thin volume area. And if we add a volume profile from this high here to the low, we can see that we don't have much volume here, a little bit here. We forgot to change monthly open level. Let's do this now. And that will be now here. Let's name it monthly open and go back. And we remove this one. So, because it's a thin volume area here, this trade for me will start as an intraday because we have a swing failure pattern of all these highs here and it could offer a potential scalp. But the most interested area for a short will be golden pocket 382 from macro all-time high to the last low and value area low from this entire range. Let's update this one too. It's still here. So this is our first level of resistance, which looks very good on the chart. Higher, each level has something to work with. We have 707 and nearly open. We have 786 and point of control here. And we have 886 and value area high. So in order to have a clear picture about which one can give us our entry short, we need to wait for price to develop more and see if we can count some waves to give us a better confluence. And same as for the macro golden pocket and macro fib from all-time high to the current low, we play level by level until price develops more and we can add extra confluences. I think this is it for today. Have a great week, take care, and I'll see you on Friday with a new educational video. Bye bye!